econ calendar, except for the head of the ECB is speaking this morning at, let me give you the exact time that I show on the schedule, 9:30 a.m. Central, 10:30 Eastern. I cannot pronounce the guy's name, but he's the ECB president. I won't murder it as I have in the past. But other than that, we have no econ on the calendar that I can see. So what that means usually is that we're going to be looking for balance on most days when we get a situation like that. Now, I want to quickly, give me one second, I don't have this going up, but I shall. What that usually means is that we get, after the first hour, we tend to get grinding action. And that grinding action can present itself in multiple ways. We can grind up very slowly like this, where we kind of do these ranges up. We can grind that exact same pattern, but it's still balanced, right, at the end of the day. But it usually after 9:30 we'll go into these choppy up and down moves. Now, considering the ranges, this can still be easily a 10-point range up and down with the choppiness. But what that prepares me for is that the moves that we're going to have are going to take longer. So I immediately want to go into more of a patience mode. Also, when we have grinding days, the characteristics of them is that they give these head fakes like they're going to break out, and then they snap back in, right? Same thing on the downside. They look like they're going to break down, and then they come back up. How will we know if we're in a balanced situation? If you'll look 2 days ago at the NYSE tick, I'm not going to pull it up right now, but if you look at your tick 2 days ago, we stayed plus or minus 500 all day long, and we had perfect balance all day long as well. So let's go through the scenarios today in terms of gap up, gap down. We're currently trading at 1816.50, which puts us just below yesterday's highs. With NQ, let me see how far we're trading off the highs on NQ. Just a hair off the highs. You kind of have to figure on NQ that they're going to make a run for new highs this morning. Essentially, the way I interpret Yellen's speech yesterday, not that I'm interpreting it from a fundamental way, just the way the market reacted to it, is that the Bernanke put has now become the Yellen put, and that's really good news for us because that means we can consistently buy downside moves and expect moves back to the upside that'll be very profitable. So let's go through our scenarios here real quick. The first thing that we want to see, just like yesterday, we want to look out for open drive higher. If you want to see what an open drive higher is, look at the first three 15-minute bars of yesterday's market. That is open drive higher. That's usually accompanied by a larger gap. We didn't get the larger gap, but we did have these three solid bars, okay? That can also be replaced by one very large solid bar. So the first thing we're going to be looking for is, can we get gap fill at 1813.5? And depending on where we open, half gap will be the other test. Now, if the difference between gap fill and half gap is a point, I don't worry about half gap. I'm simply looking for gap fill. But even if we come into gap fill, let me go through this scenario here. We open 1816 and change. Whether we reject off this zone or not, if we come in and we get gap fill or even break below, obviously Globex low is the true test as to whether buyers, immediate buyers, are still in control, right? So I would expect response of buyers the first time in and a push back up to Globex highs, which is where we get our test, right? We'll either reject off of Globex highs. There was a lot of poorly auctioned area, particularly between 1805 and, 1803, all the way up to really 1813, where our close was yesterday. This whole area from here down to here is poorly auctioned, and I would expect at some point that we're going to come back in and re-auction this area. That being said, it doesn't have to happen today. There's no requirement that it happens. I just know that at some point in the future it will happen. The other thing to keep in mind is we are stretched. We've had a huge run. We're almost up 100 ES points in a little bit over or under a week, excuse me. So it's been a huge run, and there's a potential for profit taking. You have to keep that in mind. I don't think it's going to happen today. I'm expecting a balanced scenario. So if we do not reject on the second test Globex highs and we get above, right, The first drive up should be up into initial resistance. I will take a short from initial resistance. Now, just like yesterday, right, I'm going to be keenly aware, since I broke my trading rules, of the 25-minute rule. I will not violate that today, I assure you. I will be covering or moving to break even, one of the two, and that goes for all of the zones, right? However, I would expect responsive sellers at this 24-26 area, and then right above it as well at the zone above, 31-33. Now, if we really do get another drive straight up, and people are simply misestimating this gauge, we should find there's an open gap sitting right here at this 1838 to 1840 zone. There's an open gap there, and we should find responsive sellers at this point. And it's not an outrageous stretch, right? That's essentially just under 30 points up. We had 30 yesterday. At one point, we could get another 30 today. I'm not certain that this is a very likely scenario, but if it does happen, I will be looking to take a short from this side. So here, here, and here, I'm definitely taking shorts. Okay, we'll all have good rotations. I'm willing to test each and every zone. In this location, I need good rotation up in order to take the trade without it being considered aggressive. So what would that have to look like in order to get this move? Well, if we rotate down, I'm still going to look for a 6 to 7 point move to get my trade location. So at 1811 to 1813, if I can get down to test Globex lows prior to testing this zone, right, a rotation back up, actually from either level, will simply determine whether I would take the short from the front of the zone or the back of the zone. But I have to have rotation to take this trade. Okay. Same thing with these zones here. If for some reason we get consolidation right in front of the zone, I'll have one or two ways of handling it. If I can't get a 6 point rotation off of consolidation and I want to take the zone still, I'll simply move the order to the very back with a 2 point stop. That gives me a 1-to-1 risk reward ratio, and I usually can get a shot just like yesterday from the back of the zone back to the front of the zone, even on a trend day up should we have one, right? On the downside is a little sloppier. Okay, we know that we have a lot of unauctioned area from yesterday's close all the way down to really 1803 was poorly auctioned. Okay, so again, rotation size will be critical. If we break Globex lows, when we have a poorly auctioned area, that usually doesn't re-auction the entire area in one day, but given the ranges that we've had, right, you have to assume that we could either have 30 points up or 30 points down in either direction. Again, I don't think we'll get enough rotation. Well, let's see, if we're trading 1817, it depends on what the rotation is up out of the open. If we get 1817, Globex low, I will be willing to take a shot to the long side there, assuming I can get at least a 6 point rotation there. I will, this zone right here is a mediocre zone, quite frankly. I'd rather skip this zone and take a trade out of the white zone. So I will need tick divergence or a really nice rotation into this zone in order to take it, and I'll probably play this one visually. So this will not be an automatic zone for me. The white zone will. I'll take the first move into the white zone for a trade, and I can pretty much say the same thing for every zone down here. First move into the zone. I'm going to simply use the rotations to determine whether I'm taking the front, middle, or back of the zone. So just to be clear, white zone and everything below, I'm looking to take a trade the first time in there. What are the exceptions to taking this, or what would cause me to take an audible on any of this? Okay, open drive up or down. If I see an open drive up, I want to pay attention to my time frames, right? If you'll look yesterday and prior days, right, we've been turning about 9:30 a.m. We didn't yesterday, but they gave it a shot at 9:30. So between this 9:30 and 10:30 a.m., I'm looking for a counter move. So let's say that move comes to the downside. If we have an open drive lower, or we simply rotate down through the course of the morning, that means at 9:30 at the zones, I may be willing to leave a potential trailer back to the upside, and I will be less likely to want to take trades to the short side. Right? Why? Two reasons. First of all, buyers are clearly overall in control, and the majority of days, even when sellers were in control, the majority of the days look like this on the downside, right? We came down, we got to about 9:30, 10 o'clock, and we would grind up either to the middle or all the way back up by the end of the day. So my easier trades after 9:30 were all to the long side on the gross majority of the days, with the one exception. I think we had 2 true trend day downs out of, I think, 7 or 8 down days that we had prior to this run up. However, on the upside, right, those open drives have looked different. If we get an open drive to the upside, it's gone like this, and we've either balanced sideways or we've had, like yesterday, a true trend day up where we just kept going all day long. So the counter trade is much more difficult on the upside drives. Also, like yesterday, a lot of times the rollovers won't come to the last hour. Again, I cannot stress this little action right here enough. This move to the downside just crushed people who threw the towel in late and went long. There's no rotation here. It's just all straight down, and it sucks to get caught in that. Again, it's why I try the gross majority of days simply to avoid the trading. As a matter of fact, for most of my coaching clients, I encourage them to simply focus on trades prior to 11 a.m. as far as entries go. 11 a.m., 12 o'clock Eastern, right? This afternoon stuff is harder. You're more mentally tired, and I don't have a lot of incentive to try real hard in this area, and I am almost always trading reduced size in the afternoon. Let's see if there's any. So that's my scenario. I think I covered all the valid scenarios. We know how to identify if it's a balance day, right? We'll see the tick. If it's an open drive up, the other indication is on your NYSE tick, just like yesterday morning for the first hour, the tick will remain almost all on the upside of 0 to 800. If it's an open drive lower, the tick will remain between 0 and negative 600 almost all morning long. Those are 3 simple ways. And then the rotations. Getting 2 points will be like pulling teeth, just like it was yesterday morning. All of those are indications. The reason why I stress them every morning so hard is because they cause retail traders so much in losses. And even when you're what I would consider a respectable trader, right? If you have the wrong mindset about where the market's going to go, like I did yesterday, you can still cause yourself considerable losses or unnecessary losses simply fighting what is a very straightforward day, meaning it was going to grind up all day or grind down all day. The reversals come. Keep your time frame in mind. 9:30 to 10:30, markets tend to top and or bottom around that time, and then we tend to go into balance and or a reversal mode. The reversal modes are more likely from the downside scenario than they are from the upside scenario lately. We have to assume, even though we're extended, that the buyers are in control and that there will be buyers lower who have missed once again this entire rally. I'm sure they're just jaw dropped. I didn't hear anyone call for this rally. As a matter of fact, Tom DeMar called for a 40% market correction all the way down at 1740 or 50. He was calling for it. So anyone who was following him got completely smoked. Let's go look at NQ really quickly. I haven't published the NQ chart yet. And key to our trading for today. Okay, on the NQ. Okay, so the white zone. I haven't talked a lot about the white zone lately. If we're trading above the white zone, I assume buyers are in control. And I want to forget, this applies to both the NQ and ES. The white zone works like kryptonite, right? The closer we are to it, the more strength that point has, the stronger I expect the responses to be. However, if we're trading all the way up at initial resistance and the white zone's all the way down here, it has very little bearing on what the market's going to do up here. We could easily just come back over and roll back down to the downside. And once again, as we get closer to that white zone, it'll have more and more power. It works just like any of the other zones, right? The first time is the highest odds. Second time still has good odds, but not as high as the first. And the third time is pretty damn dangerous in my opinion. It can work, but I tend to avoid it completely. Hold on one second here. So NQ, same situation. First thing to notice this morning, NQ is up almost 10. We're trading at 36.22 3/4. I think I'm doing all right on time. So that puts us right into Globex highs and yesterday's highs, right? So the first thing I'm going to be looking on at ES is, can we clear above Tuesday's high? If so, I'm not going to be overly eager to short ES. Why? NQ dragged up ES all day long. I'm not interested in getting run over. So I'm going to keep an eye on that there. Once we get above, right, I'm really not looking to take a shot at the short side until we get up into my initial resistance today. It's simply too aggressive, and it's too strong. I'd like to see weakness, and I'll short on weakness. This doesn't apply to the scalping strategy, guys. It simply keeps, it's simply with direct reference to the zones today. Go and measure your up and down zones on NQ. It's gotten really, really wide the last couple of days. Also, we are about to break to new all-time highs on NQ. Keep that in mind as well. It could cause a rush of shorts from the sidelines. The test for the open, right? If we gap, just like in ES, right? We gap and we get three bars up. Watch for a trend day up, or at least, right, that 9:30-10 time frame before you're getting aggressive to the short side. It doesn't mean that it can't roll over prior. It just means my odds are more strongly with me post 9:30 on what appears to be either a range extension or a trend day up than they are prior to 9:30, right? And I don't want to accumulate a lot of losses prior to my highest odds period of time to get a rotation down. Trap trades on NQ, what will I be looking for that'll give us a possible indication that we're going to go back down and test lower levels? Okay, so clearly we're opening right here. If we fail to get above yesterday's highs, right, I would look and Globex highs, and we come back in. Our first test is going to be gap fill, Globex lows, right? I would expect responsive buyers the first time in to push back up. If we get back below Globex lows, the first test is white zone, and I actually would expect responsive buyers here, and I expect responsive buyers at Tuesday's lows. Could it fail? Sure, but it just has too much strength. And I'm talking here about trades where I'm taking scales at 3 and 4 points and leaving trailers. I'm not talking about trying to get a 20-point rotation back up. The other thing to keep in mind on NQ, the ranges have been really wide. Instead of 10-point rotations, I want a minimum of a 15-point rotation into a zone before I take a trade. If I don't get that 15, I want to push as close to that 15 as possible to avoid getting run over. And then on terms of larger rotations, 30 to 40 points is a more comfortable and more conservative trade rotation if you're not a super aggressive trader. So the downside has the same scenario in terms of the open drives lower. I'll be looking for that. If we get that, right, that's a new scenario on our plate. If I see an open drive lower, the first place I want to look for a counter trade is when we're minus 30 on the day. That would be a 40-point move from where we're trading right now. And that would bring us from, let's see, 36.22 right down to 35.90, 80 area, right into yesterday's lows. And that's where I would look to take a counter rotation. If we open drive lower, I don't expect it. That's really my executive summary for the day. I expect balance, but I don't know how much is left from yesterday to short squeeze up or how much they're going to push in. There's no data to drive us unless the guy from the ECB president says something that's really just way out of left field. It can drive markets pretty hard. I'm going to take a look at the trend lines really quick now, guys, and then the overall look. If you just want the executive summary portion, that is now concluded. So let me pull this over real quick. Okay, so first of all, let's look at NQ real quick because it's just on a tear. Second here, that was not what I wanted. Here we go. Let's get rid of. Okay, so you can see this has gone back really since we started this topping process or slowing of the acceleration back on the 7th. And we have simply been driving up ever since. We've been holding the top end of this range. If anything, I would say that there's an additional I'd say there's an additional channel there that looks like this. This is now the top end, and really there's a fourth one there if you want, but there's not much evidence of it, but potentially another channel right here. All of this is pointing up. I see the only thing that I saw coming in yesterday was this down channel, but we've clearly already broken it. There's no point in even putting it there. It would look like this. We might get a backside test of that later, but we're clearly trading well above that. We're going to open somewhere right in here. So again, I don't trade off these channels, but it's pretty clear, right? We're consistently setting higher lows and higher highs. I would like to see that end or start to get some rotation back to the downside. When that happens, it looks like this. If I can go far enough back. Let's see where we rotated down last time. Okay, well you can see here, lower highs, lower lows. Then all of a sudden, right, it was very subtle. We had a slightly lower low, slightly lower high. The next day we went into this process of lower lows and lower highs. You don't have to catch the first turn, right? There's usually a retracement, and it makes it relatively easy to start catching the downside move whenever it comes. Everyone's always trying to catch the turn. You don't have to wait for that. So that's just something to keep in mind, and it's part of what the trend lines help me do. Let's look at ES really quick on the 24-hour. Well, here, this has been the ES since I've been tracking it with all my trend lines in it. And you can see going way back to the 5th, right? This uptrend started on the 5th, and we've been following it. And I'm talking about the two blue lines here, right? We've been following it ever since and ignoring everything else. So the first thing that I have to see in order to get any excitement about a move to the downside is, first of all, I need to see a break of these lows right here, right? I need to see us get below this area, and then preferably I'd like a retest and then a move back to the downside. But remember, we still have these old channels that it'll fall into and could provide, usually these channels tend to line up with area where there's structure. If you look back to the left, and you will find rotations back up, there's usually going to be a zone in this area as well. They just happen to line up. I don't base the zones based off of trend lines. So I want to see a series of lower lows, lower highs, just to give you a point of reference. Am I doing on time? Doing all right. I'm going to end this here in just a moment. Okay, this was the topping process. We came down, we based out. You couldn't tell where it turned, and then all of a sudden you see a series of higher, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and the short side became relatively easy to get a hold of, or at least figure out that it was coming, right? That came from a period of time, if we go back far enough, right, where we were ripping up for days and days. And look, this rotation took a little bit of time, but you can see where the downtrends kicked in. And even if you missed these downtrends, look at the rotations from the lows consistently back up all the way through this, and I'm pretty sure we'll get something that looks pretty damn similar to all these days. We'll get counter rotations that move back up. So I think that's enough said in that area. Quick look at the volume profiles. Get this back where it belongs. The one thing I want to point out is NQ, we're a hair away from trading above all-time highs. We just barely missed it yesterday. I'll be watching this very closely. What I would watch for is actually a break above, and then if we fall back below, that would help us kind of move back in. There will be support right here the first time in. That's an open gap. There's another open gap right down here that needs to get tested. I have no idea if we'll make it all the way back down. We should, but you know, should doesn't much matter, simply an opinion. You could also argue possible double top with a big stretch. That's certainly a possible argument too, and something that you should consider, right? We've come up, classic double top, and then a rollover back to the downside. I don't know how that's going to happen with the strength we have, but it never looks like a top when we're at a top, and it never looks like a bottom we're at a bottom. That's how the market's designed to work, right? So you have to keep your mind open to both sides of the scenario so you don't get caught off guard. Watch your stops, stick to your trade rules, right? Don't try to be a superhero in one day. It's not about any one day or any one trade. This is specifically to my coaching clients. Collect your 2 points, move on to the next trade, collect your 2 points, go home, consistently increase your trade size, build your trading accounts, make lots of money. Life is a lot easier that way than trying to figure this whole thing out. It's much more difficult. Anyways, guys, I'm going to jump off. I want to get ready for the day. I will give a quick look at the ES, just by the way, because it is trailing behind NQ. And if we look, right, we still have quite a bit of room to the upside, and we have stopped, right at the bottom of the prior range. If we can get above this level, next area is really this 1830, 1832 area, somewhere right in here. I don't remember where I pinpointed the zones, but just looking at it visually, right, you can see that we have some resistance if we can jump this 1820. That's really the key. We can push up to 1825 and then this 1830 area. But once again, it would not be unusual if you go back and look at that pattern, right, to see us go and push all the way down, have a huge recovery, reject from up here, and then come back down. I wouldn't be surprised to see this pattern. I'm not saying it will happen. I'm just saying it's not impossible, and I'm keeping my mind open to the possibility of a downside move, but let the zone set that move up for you. Don't try to force it, basically like I was yesterday. So anyways, have a great day, guys. Y'all can reach me at tradingperform@gmail.com. NQ's opening at the high. So keep an eye on that. Look for rejection. I'm not overly eager to step in front of the train until I get some good indications that we're actually going to roll to the downside. We'll talk to y'all later.